I want to talk about some of the estate changes associated with the Tax Cuts and Jobs Act. This is a big one, and this is the one where I feel there's a little bit more urgency to jump on at least exploring some planning opportunities, because right now the estate tax exemption is $13,610,000 per person. So that means that if a single person has a net worth in excess of $13,610,000, any dollar above that threshold will be subject to a 40% estate tax when it goes to children, non-spouses, right? So it's a pretty big number, and really it eliminated an estate tax problem for a lot of people. However, this too is scheduled to sunset. So in 2026, when we wake up on January 1st, it is scheduled to revert back to what it was pre-Tax Cuts and Jobs Act, but adjusted for inflation. So the estimate is that it will be about $7.5 million per person or $15 million per couple. And this is huge, because if you need to think about strategies to try to take advantage of these elevated estate tax exemptions, now is the time to start putting a lot of those vehicles in place, because you don't want to wait until the 11th hour, either because attorneys will be busy, and you also want to give these different vehicles that you're putting in place time to marinate, to give them a business purpose. And the same applies with the generation skipping transfer tax. They're coupled, so if the estate tax exemption drops, so will the GST, and there's some planning opportunities there as well. And I highlighted here that there's no clawback, meaning that if we take advantage of these elevated estate tax exemption levels to make gifts to our children in trust, whatever we decide to do, and then the exemption drops, you're not going to have to claw those gifts back. They recognize that the reason that the exemption dropped, and you just took advantage of the exemptions available at that time. So they're not going to have your gifts reverted. And then I'm just highlighting annual exclusions. In 2017, that was 14,000, and now it's 18,000 per person.
And I'm often, just to add just a little color there, I'm often asked, like, so I can only give one person $18,000, or else I'm going to be taxed. Nella, could you address that question?
Yeah, very good question. Very good question. And this, it might look like a small number, but you can really take advantage of an annual exclusion and really take a lot of funds and a lot of wealth out of your estate without paying estate tax. So Matt, very good question, because you can give 18,000 to each of your daughters, but so can Andrea. So between the two of you, you can basically pass 36,000 to your children every year estate tax free. Now, once the gift exceeds 18,000, then you will be dipping into this big number that we're talking about, that 13,610,000. But very good question.